officer training series with the mortgage calculator. Tonight, we're going to talk about how to structure a 1099 loan. So, great loan type, great tool to have for loan officers out there. So, we'll get started here in just a moment. Just waiting to go live on all the different platforms. Go ahead and drop a comment there in the chat as you tune in. You can also use the chat to drop any comments you have in there as well as we go through here tonight. All right, I see comments coming in. Appreciate everybody tuning in nice and early. And it looks like we're live on all the different platforms, so we will go ahead and get it started here. As I said, keep dropping comments there in the chat and drop any questions you have in the chat as well. So, welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender, and what we do every Tuesday and Wednesday evening at 7 p.m. Eastern is our loan officer training series, where we go through a new loan officer training each night. And tonight we're going to be talking about how to structure a 1099 loan. Great tool to have because we specialize in non-QM loans, something we're very familiar with. So I will let Jose, our sales manager with 28 years of experience, take us through how to structure a 1099 loan. Go ahead, Jose.
Good evening, everybody. A special good evening to all of our TMC team members out there. All right, today's training on how to structure 1099 borrower loans is another of our special products for self-employed borrowers, right? I was just discussing earlier that a 1099 loan is potentially the easiest loan you're ever going to do. There's just a few basic steps that you need to make sure that you follow in order to properly structure and be able to close your deal. The first one is that all 1099 people are going to be considered self-employed borrowers, right? They may be working for a company who they may tell you that's their quote unquote employer. But it all begins with what is the 1099 form. The 1099 form is a form given for non-employee compensation, right? There's no tax returns. There's no taxes taken, withholding, or anything like that. So let me go ahead and share the presentation with you, right? And let's get right into it. So let me give you a little bit of context here for our 1099 loan type, and then we're going to go into some guidelines, and we're actually going to structure a loan right here. So 1099 is an IRS form issued to sole proprietors, independent contractors, partnerships, and LLCs for non-employee compensation. At least for our purpose here, non-employee compensation could be issued for a lot of other things. For 1099 loans, you have to be a U.S. citizen or permanent resident alien or non-permanent resident alien with U.S. credit, like DACA, right? DACA program, for example, or somebody who's working here with a work permit, depending on the visa type, right? With a work permit, and they have U.S.-based credit, you qualify for a 1099 loan. Now, if you're a foreign national, not applicable, unfortunately, because the nature of the 1099 loan is that of being based on U.S. based employment, right? And as we all remember, our foreign nationals, their income on the application cannot be U.S. based, right? It has to be outside of the U.S. based. 1099 loans, we do allow entity vesting on investment properties only, LLC, corporation, S corp, partnership. It's the perfect program for realtors, right? So that's why I'd say every MLO out there should be reaching out to their realtors and looking to build relationships, and at the same time offering them a 1099 loan. And you all see the benefits of 1099 loans. Couple different options for 1099 loans. You could have somebody that previously worked for that same company as a W-2 employee, but is now working for them as an independent contractor. which is what a 1099 worker is, or somebody that previously performed the job as a W 2 employee but now doing it as an independent contractor for the same company. Right? That's another option. Uh, and then you have the person that's been just doing it for 2 years, right? I'm just giving you those options as possible options with less than 2 years of self employment. The key component there usually is going to be licensed, that you're licensed to do that duty, like a electrician, for example, would be licensed, nurse would be licensed. A couple of license examples there. Now, what are some of the credit and asset requirements? These are obviously going to vary depending on the scenario, but from different reviews we've done of the different conduits out there, you're looking at credit scores as low as 680% loan to value with at least two trade lines reporting in the past 24 months or three trade lines in the past 12 months. 600 is the lowest score we've seen for an 80% loan to value using 1099s. You see, we have some preferred options, but those usually start at a 660 or above credit score. And it's really going to depend on credit events as well. 48-month seasoning on credit events is the best that I also found for that same option that was with a 600 plus credit. 48-month seasoning on any credit events, which would be foreclosure, deed in lieu, stuff like that, stuff property related credit events. Um, and reserves are always going to vary depending on the option, but you're usually going to be looking at least needing 6 months. But obviously, when you're looking at rates, when you're looking at your specific loan and the needs of your borrower, then you're going to scour all the different guidelines that we have for all the different options that we have, and then you will see which is the best one. Okay. So, what are some of the properties and LTV options that are available? We're looking at 90% max LTV. Uh, Also on PUDs, we can even do warrantable condos up to 90% max LTV. 2 unit properties up to 90% LTV, 3 to 4 units, 85%. These are obviously our primary occupancy situations for the maximum LTVs. Um, Modular homes are considered as long as not a unique properties, and condo hotels, which are all the rage now, up to 75% LTV. And we can even do it's always a tough one, right? Tongue twister there. Rural properties permitted up to 20 acres and up to 80% LTV on our 1099 program. That's not too bad. Non-warrantable condos up to 85% LTV. So, income requirements, again, we're generalizing here, right? We're not going to go into each specific guidelines, even though we are going to go into a guideline now to structure our deal. Um, so, income requirements, this is why I say that the 1099 loan will be probably the easiest, potentially can be the easiest loan that you would do because um, it basically states 10% expense factor. That's it. So gross income on the 1099, you use 10% of that. I mean, 10%, deduct 10%, use 90%, excuse me. 90% of that is your net income for that borrower. Now, you are going to require possibly some type of business narrative, right? Some of the options may require the borrower to be with the same 1099 provider for the last 2 years, but that doesn't mean it's 2 years of 1099s. So, and some only require them to be with that 1099 provider for 1 year. Now, here's a very critical component, but if they get an actual 1099, then this shouldn't be an issue, right? The income of the 1099, the gross amount of the 1099 is going to be validated with a wage and income transcript from the IRS. So You do have to get that type of a transcript, not a full transcript to show the income, just W-2 and 1099, and it's just going to show the gross amount of the 1099, and that should match the same amount of the document that was turned in. Um, and in some cases, depending on the nature of the job, may require confirmation from the employer that no job-related expenses are incurred by the borrower. And critical point to note here, there is independent third-party verification required of the income. What type of verification we're talking about? We're talking about either pay stubs with year-to-date income. Obviously, there's no taxes being removed. It's just going to have gross amount paid each distribution or however often the borrower gets paid. Or it could be some type of a written verification of employment just stating a year-to-date income, which is all we're really looking for, verifying the year-to-date income that's going to match the prior year's 1099 income, because this is a contract worker, right? They're not on salary. They're just there working, and they get paid when they work. And if they don't work, they don't get paid. That's it. There's no unemployment compensation or anything like that. So they have to be able to verify that somehow or another. It may be with a letter from the employer's tax preparer or something like that. Different ways to get that independent third party verification, but that is a requirement with the 1099 program. And some property considerations. Now, this is not a DSCR loan. The DSCR loans are the ones that are the most flexible with seasoning requirements, especially on a cash out. So for most of these programs, you're going to be looking at 6 months seasoning to use the appraised value on cash outs versus using purchase price plus renovations. Gifts are allowed. Private verifications of rent are accepted when a verification of rent is required with a reduction in LTV. And note minimum square foot requirements, right? Single family home, 600, because I get people to ask about tiny homes. Well, 600 square foot is usually what you're going to find for all these 1090 programs as the minimum square footage for a single family, 500 square foot plus a full kitchen for a condo. And if it's a multi-unit property, duplex, triplex, fourplex, you're looking at 400 square foot minimum per unit plus a full kitchen. So not kitchenette, kitchen, stove, range, refrigerator, and a sink. That's pretty much what they're looking at there. So, but 6 months is the key number to note there. So now let's look at a sample guideline. And then from there, let's look at our borrower, right? We'll look at a sample 1099 that was given to our very famous borrower that you'll see in a minute. So look at now. This is a particular guideline from one of our conduits. Not the only guideline. So again, but this one works well for my borrower. And notice it says this program is payments to sole proprietors or contract individuals are reported on IRS Form 1099. I happen to grab a 1099 NEC, non-employee compensation, but it could be a 1099 miscellaneous. Just has to be, make sure it's 1099, right? And included in the borrower's Schedule C if they get a 1099. Tax returns may be waived. Look at this. And wage earner documentation requirements followed in this subsection when all of the following requirements are met. Now here we don't need to provide tax returns because we're giving 1099s for the most recent 1 year provided. Yes. 1099s are from the same single employer for the past 1 year. Yes, in this case, he's a contract worker, electrician. 1099s are validated with a wage and income transcript from the IRS. That should not be a problem unless it's a bogus employment or something going on there, or unless the employer is not reporting the 1099s or something is going on that's not kosher. That shouldn't be a problem for anybody. And year-to-date earnings are verified via a year-to-date pay stub written VOE, or other equivalent third-party documentation, right? So we mentioned all these points. And last but not least, all gross receipts will have an expense ratio of 10% applied to them. Amazing. That means we get 90% profit margin. So only if the borrower does not meet the requirements above would we need tax returns to verify income. But we already know that my borrower meets the requirement. So we got 90% of the income is what we can use, and 700 is the minimum credit score for 90% LTV as well, by the way. So let's see our famous borrower here, Mr. John Homeowner, the one and only. Those of you know Mr. Homeowner because he is on most people's training files, right? So this is actual information here from the John Homeowner training file, except for the tax ID number for Wonderful Place. Okay, but this is Mr. John Homeowner's tax ID number. This is a 1099 NEC for non-employee compensation. John Homeowner is a licensed electrician performing electrical contracting for Wonderful Place. And he has been there. He was contracted by them since January 1st, 2023. Right. He receives pay stubs every 2 weeks. They give him his distribution there, his pay. Obviously, it's gross income. He has no problem. He has year-to-date pay stubs. Now, important to note is he only contracts his services out to Wonderful Place. So for this particular program, that's something that he may have more than one, but we can only use one, so it better be a lot. It's like if they have 10, at least for this particular program, if they have a bunch of 1099s, that's not for this particular 1099 option, right? So, but really important to note here, John has been licensed electrician since 2009. So even though he's only been a little bit over a year working 1099, he's been licensed as an electrician since 2009. He previously worked for another employer, not Wonderful Place, but he worked for another employer as a W-2 licensed electrician, right? So that's the key component to note there is W-2 licensed electrician, had the license since 2009, been working over a year, and he has his 2023 1099 already. Everybody should have got theirs already in the last couple of weeks. 760 credit score. Okay, now we're talking music to our ears. 500,000 purchase price. Taxes, insurance, and HOA is $550. He's buying a PUD, attached townhome. And his other debt service, John's not very complicated with fancy schmancy cars and stuff. He's only paying $400 a month minimum payments on other debt service. John, like every other borrower out there, desires the maximum loan to value, right? You know what that means. We have a saying for that in Spanish, bueno, bonito, y barato. That means he wants it good, he wants it pretty, and he wants it cheap, right? Everybody's desire, the unicorn. And he's buying, I mentioned, an attached PUD, a townhouse. So $500,000. He must be buying a townhouse in South Florida, Fort Lauderdale. So let's see what we got for Mr. John Homeowner. So I ran the scenario that you saw right here. This scenario, I loaded it up into the CRM and 1099, 1 year option for 1099. 2 years history we're looking at between one thing and another. In his case, who he worked for previously as a licensed electrician, and then what he's currently doing now as a 1099 contract worker. We already covered he meets other requirements, so I loaded this up into the quote. And these are the best options at a lower cost buy down. There were a few more, but I didn't want to extend it too far down because John's looking to get in lowest cost everything, right? So here's different rate options we have, all with 10% down, all with no mortgage insurance. The lowest cost option is 0.875. This is the payment, and this is a payment with escrow on a monthly basis. It's not a lot of money there. So let's look at our income analysis here, right? So his monthly income is calculated by getting the 1099 income, 124,500. That was right off the 1099 form, and 78 cents. Can't forget the 78 cents. Multiply that times 90%. That's why I said it's the easiest loan you're ever going to do, right? Multiply that times 90% and divide it by 12, and that's your monthly income. As long as the other conditions are met that we just covered, the bullet points regarding the income, there's no issue here with $9,337.56. You may be required a business narrative letter of some type, depending on what he does, how long he's been doing it, all that kind of stuff. But typically, this is very simple, especially if, same type of duty, right? Electrician to electrician. So now the housing DTI 39.75%, that is just getting the PITI and dividing it by his monthly income. So John wants to keep it simple. So we're going to go with 9%, costing him 1.25 points. So we're looking at 3712, his monthly payment with escrow, right? So I got 3712 divided by 9337 and 50 cents gives us 39.75. And then now we get his total debt is just getting the PATI, adding his $400 per month other debt service, dividing by 9337 and 50 cents, and we got 44.04% total debt DTI. That's really important to note because above 45.0%, pricing may change or some options may be totally eliminated, right? So something to note when you're searching for your conduits and guidelines. Note that some cut off at 45, some may cut off at 43, and some go to 50. So in this case we're good at 3712, and we probably would still be good a little bit higher up in the rate, but he likes 9%. It's a nice round number, so we're 39.75, 44.04. And then further cementing the deal, we know that John previously worked as a W-2 licensed electrician for many years, and now has 13 months as a contract worker, also requiring a license for a wonderful place, and received a 1099 from them. He can provide year-to-date pay stubs for all earnings received, or the company can provide a written verification form with the borrower's year-to-date income. We already verified that because we had his pay stubs. I just didn't have any here to share with you today. But Mr. John Homeowner, he's everybody's favorite borrower, gets us through all our training. So as you can see, this is the best case scenario for the 1099 loan because we have the 760 borrower who has great income, very solid. So in some cases, this is where we may get the business narrative involved because you may have the borrower with was coming in from a different kind of business. So in those cases, you may be required to have those 2 years in that 1099 function, if they don't have the appointment. But again, scour the guidelines out there to see if there's any other true 1-year option. But this is the best one here that we have, combination of rate and coverage and everything else involved.
All right. Thank you, Jose. And it looks like we have a question here. So the question is, what if someone has both a 1099 and W-2 for the same year, looking to use both incomes?
Yes, we can do it. Totally can do it. However, the caveat there is that they have to be contracted by the same company that was employing them as a W two worker. Because you know what can happen in many cases is that the company switches from W two to 1099. The people stay working there. They didn't really have much of a choice. Those that
Sounds like
didn't
she's
want,
asking about two incomes, though.
yeah, no, she's
Two
asking if you
jobs.
can use the 1099 and the W two. Yes,
Yeah.
if you
Two
have the
separate
same,
jobs.
well, if
Two
it's
incomes.
well, now if it's two separate jobs uh, for the same year, I mean, I don't know how to interpret that. As in, if they have, okay, the other interpretation would be if they have two separate jobs for the full year.
That's
Can
what
you?
I'm saying for, she says,
Yeah,
both incomes. It sounds like they would
yeah.
have both
If you
income
could
and
use,
two streams of income for the
yeah,
loan.
yeah, sure. We have options that would allow you to use your W two income and use your 1099 income as well. And no tax return would be required for the W two income either.
If you go with the 1099 pricing, which is a little
Correct.
higher.
Yeah, yeah, and the 1099 LTV, of course. Yes.
But you could obviously also do a full doc loan with any borrower that has any income for a
Yep.
conventional loan. So you could always do multiple incomes if it qualifies, which
Hmm.
2 years of two jobs is required, right? For pretty much any program. So make sure that they have 2 years of two jobs. 1 year of having one job, another year of having two jobs is not 2 years of two jobs. That's what's tricky there.
All right. I don't see any other questions. So I guess we'll wrap it up here and get out of here right on time tonight. So remember, we do this Tuesdays and Wednesdays, 7 p.m. Eastern time, where we do our loan officer trainings. And so we'll be back tomorrow with a new topic. We appreciate everybody tuning in. Thank you, Jose. Great presentation. We'll see you all tomorrow, 7 p.m. Eastern time, for the next episode of the loan officer training series with the mortgage calculator. Have a good night, everyone.
Thanks, everybody.
Have a great night.